Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week, we're once again putting artificial intelligence in the frame, with insights from one of the leading lights from the UBS Global Wealth Management CIO, Ulrike Hoffmann-Burchardi, who in her role as head equities has a sharp focus on AI. In our discussion, we'll consider whether the current hype around AI tech and its adoption is justified. We'll consider what's next as capex and technical innovation continue apace. And we'll hear from Ulrike about UBS's investment framework to identify AI opportunities, shed some light on how AI works, and highlight its implications for everything from the global economy to sustainable development. It's a real pleasure to welcome Ulrike Hoffmann-Burchardi to the show. Let me start with this idea about the fact that it is the popular narrative. Everyone has a view, don't they, on AI. Are we at a point where artificial intelligence is sort of overhyped? Is this narrative around the technology actually unhelpful? What's your view?
Yeah, first of all, Tom, thank you so much for having me on your podcast. So AI and hype, we have a very clear stance. We actually think that AI is not overhyped, that in fact, AI is underappreciated. And I know a lot of people like to say certain trends are overhyped in the short term and underappreciated in the long term. But what we are saying is that we think AI is even underappreciated in the short term. And one of the reasons is that unlike any technology before it, AI can self-improve. And that means that the rate of change is so much more rapid and also unpredictable. And I think this is one of the reasons why we think AI is going to be most likely the most profound innovation that we have seen in human history, but also one of the largest investment opportunities. And I would say it all started with the transformer model in 2017 that was this watershed moment for this new wave of generative AI. And you may ask, why do I say that with such conviction? It is because I was experimenting with neural networks, which are the foundation of these large language models in the early 2000s. And I experienced firsthand how difficult it was to come up with reliable predictions back then. And now with the transformer model, generative AI can produce all sorts of high quality content and also content that is extraordinarily diverse. AI can write code even to improve itself. Currently, GPT-4, it's training its next version, GPT-5. Gen AI can tell jokes. It can write popular music. It can produce movies, even with de-aged versions of the main characters. And another example, it can predict the 3D structure of proteins. So just examples for these amazing abilities that make us believe that we'll see the largest productivity boom that we have seen in human history, also exceeding the productivity increases that we have seen over the internet era.
Yeah, that's absolutely fascinating. And I wanted to kind of follow up a little bit. I guess on the one hand, as you say, you've answered, I think, very elegantly why the view is it's not overhyped. But from what you say there, Ulrike, it's almost underappreciated then. Is that fair to say? Because you've already mentioned the rate of innovation and some of the features of that. But it seems that even with all of these lofty expectations that everyone has, if anything, in this cycle, generative AI applications are actually they're exceeding even those very, very high ambitions. So in a sense, I guess it's more a question of whether it's underappreciated at this time. Is that a fair point, do you think?
Yeah, we think it's even underappreciated in the short term. And I think one of the things that we always like to go back to is actually, some data points around productivity increases. And if you think, for example, as a developer, if you use one of these coding co-pilots that are based on large language models, you become 56% more productive. And if you think about just salaries for developers, that translates, at least in the Western world, into about 1,000 times return on investment. And this is just only one of the data points. We've also heard more and more CEOs of large companies talk to the ROI of generative AI, sort of maybe two data points to call out was that Doug McMillon, the CEO of Walmart, said that they use generative AI to update their 850 million item product catalog, and said for them, using Gen AI for that meant a ROI of about 100x. And then Andy Jassy, the CEO of Amazon, actually, he went even further and quantified the dollar amount of savings for them using Gen AI when they upgraded applications from one version of Java to the next. And that savings was $260 million, which is about 2% of their net income that quarter. So I think these are data points that suggest that there is tangible ROI. And I think while we can't be certain what dollar amount in aggregate will generate with it, we do know that these data points are the worst ones that we'll ever see, that these models are only going to get better over time, and therefore the ROI will also only increase over time.
That's interesting. And I suppose one of the other kind of key questions that's been asked, certainly over the last kind of couple of years, I would say, is about exactly on that point about ROI. And this question, what is the clarity of understanding almost about the value creation? But those numbers that you were sharing are pretty arresting. And as you say, the direction of travel is clear. So again, do you think that we perhaps shouldn't be interrogating or asking these questions about value generation? Actually, we should have more conviction that the ROIs are there and indeed will improve over time?
I do think so. And I think we see that the capex investments that are continued to flow into AI data center capex infrastructure are a testament to exactly what you just said, Tom. There is a race now to get to superintelligence. And I think the price is so high that all the large tech companies will continue to spend. We actually think that that data center capex cycle is going to last for some time. Our own estimates are that we're thinking there's going to be about 400 billion of spend into AI data center capex more broadly by 2027. And that the AI data center capex will be the vast majority of that, dwarfing what we're spending on general purpose data center infrastructure at that point. And if you think about this in the context of history and to put it into perspective, that would mean we are spending more on data center infrastructure than we spent on fiber cable optics in the late 90s. And I know that sounds massive, but here's why I think it's going to happen. Because each generation of a large language model requires more and more compute. And the reason for that is that each large language model uses more and more data, more and more parameters, and now more recently also more complex inferencing. If you could just start with the parameters, these large language models are loosely modeled after the human brain. And the human brain has about 100 trillion parameters, which we can say are analogous, to synapses. So the larger foundational models right now have about 1 trillion parameters. Clearly, if we model it after the human brain, there is more upside, and we could easily see these models going up in parameter count by 100x over the next years, maybe even more, exceeding, the number of synapses even in the human brain. So that's the one vector or tailwind for further compute. The other is data. Our data is exponentially growing over time, but also we're only using a small fraction of all the available data right now for training of these models. The amount of data available on the internet is magnitudes larger than what's currently being used. And then we are creating more and more data synthetically also that we can use to train these models with. So data is another big factor that will drive compute over time. And then lastly, more complex inferencing. So now these models, when we ask them a question, they may not want to answer directly. They may, especially for more complex problems, explore different ways of reasoning and then decide which one is the best way, which one is the most accurate solution. And that in and by itself also creates more demand for compute. For example, the current version, OpenAI's most recent version using this type of reasoning, O1, needs about 4 to 6 times the compute compared to a prior version 4.0. So again, another factor that is going to drive the need for more and more compute. A lot of the tech CEOs have talked to the increase in compute needs. Daori Amodai, the CEO of Anthropic, for example, said that just for training alone, the scale laws are about 10x from one generation of a model to the next. So this year, the training for the large foundational models is about $1 billion a year. But by next year, he expects that to go up to 10 billion. So clearly, this price, superintelligence, is so valuable that we think that spend into data center capex will rapidly continue and also exceed expectations over the next few years.
Well, yeah, that's really interesting. And I wonder then, it's less a question, I suppose, then about wondering whether the capex investment is too high and more about looking at what that drives and what that can prompt. And I wonder, if we want to interrogate that, do we need to slightly shift our focus and consider, can we see or can we envisage the use cases materializing and at the scale to justify those investments? Is that what we need to look to? And if there's any question marks about this process, it's really there rather than looking at the capex investment on data in and of itself.
We certainly need to look ultimately at the application layer. How much can be monetized through applications? And again, these data points that we talked about earlier, I think are the reason why we're going to be seeing more and more opportunities on the application layer. We estimate that by 2027, there are about 400 billion in revenue opportunities in the application layer, driven by advertising, also just productivity improvements in the work environment, using these co-pilots, not just for coding, but also just for general support, having an agent that helps you organize your work, reason through your work. That's another area which we call more overall corporate productivity, but also marketing and R&D. So for us, these are all buckets where we can deploy Gen AI and lead to more productive outcomes. We had very early stages, but I think these data points where now companies with scale, using AI at scale, such as Walmart and Amazon, have shown that they can drive cost savings at scale are very, very encouraging. And I think we'll also see new business models evolving. So the first stage is probably just improvement in productivity and reduction of costs. But over time, I think we'll also see how do we reinvent businesses now that we have agents sitting on top of a traditional compute layer. And I think the companies that in particular will profit from generative AI are those that are helping others or enabling others to use AI for productivity gains and new ways of doing business, but also deploy AI themselves internally. And I think that's one area that is very interesting to us on the investing side, is those AI enablers are for us currently the key investment focus, not only because they're selling new products to other companies, but also because they drink their own champagne. They're using their own products internally. And again, there are multiple examples like the one we talked about, but also, a company like NVIDIA, which sells the key AI chip, the GPU. NVIDIA also uses Gen AI internally to lower costs, in particular in R&D. It's actually interesting to see that NVIDIA is one of the companies with the highest revenue per employee in the S&P 500. In the last quarter, they had about a 3.25 million revenue number per employee, which I think shows how efficient the company is, but also how they use AI to help them, design their own AI chips. So they're using AI directly for the benefit of improving AI. And we see that, I think we'll see that across a lot of these companies in the enabling layer, that they'll be able to improve margins over time. And I think that is something that is not necessarily in expectations, because most people think all this capex that we talked about earlier, of course, will be a drag on margins as that translates into depreciation. But I think it will be offset by the efficiency gains that these companies will achieve deploying their own AI tools.
Yeah, really interesting. Can I ask you a little bit, Ulrike, about the rise of open source models in this space? Because I guess there's hundreds and thousands of them, I don't know, millions potentially. And again, some people, and again, maybe it's journalists unhelpfully throwing these kind of questions into the mix, are saying, well, hang on, when will these overtake, OpenAI, for example? And this is an interesting question. Will they, in your view, or actually should we look to the proprietary models actually to continue to lead in the space? How do you make sense when you look at that landscape?
Yeah, it's a really interesting question because, like you said, we have seen an enormous rise of open source large language models. In total, the number of models, for example, on Hugging Face, which is a platform that evaluates open source and also closed source models, has now over 1 million large language models registered on their site. And that is up from a little over 100,000 a year ago. So a huge explosion in models. And of that increase, the vast majority is open source. So certainly a lot more competition for closed source solutions. But at the same time, if we look at the ranking in terms of predictability and reliability, the closed source models are still the ones that rank on top. And I do think that will remain the case over time, even with this increased competition, because the capex that's now required to get to that level of predictability and reliability is so high that it will only allow a few companies to compete. And therefore, very likely, we will get into a future where we will see just a few foundational models dominating, because they are the ones that can continue to invest in becoming super intelligence or being, another way of saying, the PhD level expert across all domains. And I think it's going to be very hard for these open source models to compete at that level. I think there will be a lot of room for open source models to focus on smaller company-specific use cases with proprietary data, or also maybe broader application that don't quite need to operate at a very high level of precision and reliability. But I'm betting on the closed source models being the dominating large language models of the future.
Just finally, Ulrike, look, we've started off by talking about the fact this is, a profound, maybe the most profound innovation, and consequently a huge investment opportunity. And we've already explored that in some detail. Just to wrap things up, if we talk about this investment framework, to look at these opportunities, to distill how you and your colleagues see AI working and affecting these areas, just give us a quick conclusion about what investors need to do. There's a report from back in the summer, Sizing and Seizing the Investment Opportunity. There is so much white noise around AI, and you've unpacked it all in so much detail. But just remind us finally again, for investors to take away, what do they need to keep front of mind when they're looking to make sense and then to make good decisions based on what they see in the space?
I would say 3 important takeaways. One, and you alluded to it, we think that AI companies should be part of any financial investment portfolio. And then secondly, currently, when it comes to AI investments, we prefer the AI hardware layer. So the semiconductors, the AI chips, data center infrastructure, and also cloud computing. Where we are less optimistic is on the software side. So one of the superpowers of Gen AI is writing code. We'll see a proliferation of computer code over the next years. And that means that software is just going to become abundant, less rare, and therefore less valuable. I think it's conceivable that we have software companies that just have one founder employee. Everything else is going to be looked after by AI agents, whether it's writing certain sections of the code, dealing with customer service, billing. That is a scenario that is not unrealistic over the next few years. So we think software companies, existing software companies, will come under pressure with the advent of Gen AI. And again, our focus is right now on the enabling layer, but over time also on companies that can use proprietary data that is not widely available by definition, and use Gen AI to make those valuable inside the organization, but also with their customers. So in other words, we think over time, the opportunity set will shift away from the enabling layer. I mean, there will always be opportunity sets there, but over time, we'll see more opportunities in the application layer from companies that have unique data and also an AI-first mindset.
And that was Ulrike Hoffmann-Burchardi, bringing us to the end of this edition of The Bulletin with UBS, setting the agenda in the fast-moving world of finance every week here on Monocle Radio. You can listen again and explore more at monocle.com. That's where you can also join the club and subscribe to Monocle magazine. You can also follow this programme wherever you get your audio. And don't forget to discover more and to find out how UBS can help you by heading to ubs.com. This is The Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.